Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Methods of listing. Section 7.1. Applicants without equity securities already listed. Applicants without equity securities already listed shall bring securities for listing through any of the following methods. Section 7.1.1. Applicants without equity securities already listed. An introduction. This method of listing is for companies that do not wish to raise additional cash by way of issuing new securities, but simply want to list a class and/or type of securities to provide for price discovery of such securities, and provide a potential exit strategy for shareholders who may wish to sell some or all of their shares. For an introduction, the securities must be of such amount and so widely held that their marketability when listed can be assumed and the listing process could be relatively fast. Section 7.1.2. Applicants without equity securities already listed. Specific requirements for an introduction method. MSM will require a certified copy of the up-to-date share register. And B. The applicant shall comply with all conditions for listing as set out in Section 3. Section 7.1.3. Applicants without equity securities already listed. An initial public offer (IPO) or public offer. For sale, an offer for sale is an invitation to the public by or on behalf of the holders or allottees of securities to buy securities of an issuer already in issue or to be issued, and may be in the form of an invitation to tender at or above a stated price. A full prospectus is required to be published. B. For subscription, an offer for subscription is an invitation to the public by an issuer to subscribe for securities of the issuer, not yet in issue or allotted, and may be in the form of an invitation to tender at or above a stated price. A full prospectus is required to be published. Section 7.1.4. Applicants without equity securities already listed. Specific requirements for an initial public offer or public offer. A. An issuer shall state the minimum level of subscription, below which the issue would be cancelled and the subscription would be refunded. B. In the case of offers for subscription, the MSM shall be satisfied as to the fairness of the basis of allotment so that every investor who applies at the same price for the same number of securities receives equal treatment. C. In the case of offers for sale, the MSM shall be satisfied as to the fairness of the basis of allocation so that every investor who applies at the same price for the same number of securities receives equal treatment. Section 7.1.5. Applicants without equity securities already listed. A private placement or placing. A private placement or placing is a method of listing by obtaining subscriptions for or the sale of securities by an issuer privately to selected persons or investors approved by the issuer or intermediary. Section 7.1.6. Applicants without equity securities already listed. Specific requirements for private placement. The MSM may not permit a new applicant to be listed by way of a placing if there is likely to be significant public demand for the securities. B. The MSM may be prepared to allow preliminary arrangements and placings to be made to dispose off securities before the start of dealings where necessary to comply with the requirement in 3.2.1 t. that a minimum prescribed percentage of any class of listed securities must at all times be held by the public. C. The MSM may require a list of places. D. If the securities are not offered to existing holders in proportion to their existing holdings, then any offer requires the prior approval or an ordinary resolution of the meeting of shareholders. Section 7.1.7. Applicants without equity securities already listed. Notwithstanding the requirements in Rules 7.1.1, 7.1.3 and 7.1.5, the MSM may permit applicants to bring securities to listing by other methods in cases where it is satisfied that the number and distribution of securities in issue will allow the proper creation of a market. Section 7.1.8. Applicants without equity securities already listed. An applicant contemplating any another method shall consult the MSM prior to making an application. Section 7.2. Applicants with equity securities already listed. In addition to methods in Rules 7.1.1, 7.1.3 and 7.1.5, applicants with equity securities already listed may bring securities, whether or not of a class already listed, to listing through any of the following methods. Section 7.2.1. Applicants with equity securities already listed. A rights issue. An offer to existing holders of securities to subscribe for further securities in proportion to their holdings made by means of the issue of a renounceable letter of allotment or other negotiable document, which may be traded as nil paid rights for a period before payment for the securities is due. The renounceable letter of allotment must specify the time, being not less than 21 days, in which the offer may be accepted. Section 7.2.2. Applicants with equity securities already listed. One of two. Specific conditions for rights offer. A. In a rights issue, the MSM may grant a listing of securities in nil paid form. Upon the securities being paid up and the allotment becoming unconditional in all respects, the listing in nil paid form will be amended without any need for further application for a listing of fully paid securities. B. If existing holders do not take up their rights to subscribe in a rights issue. 1. The securities to which the offer relates must be offered for subscription on terms that any premium obtained over the subscription price, net of expenses, is to be for the account of such holders. 2. The securities may be allotted or sold to underwriters, if on the expiry of the subscription period, no premium, net of expenses, has been obtained. And 3. No excess applications are permitted without the prior permission of the MSM. Section 7.2.2. Applicants with equity securities already listed. 2 of 2. C. A director of the issuer will not, save for exceptional circumstances, be permitted to subscribe for or purchase excess securities without those securities being offered to existing holders on the same terms. Section 7.2.3. Applicants with equity securities already listed. A consideration issue, an issue of securities in consideration for the acquisition of assets, or an issue of securities on an acquisition of, or merger with another company as consideration for the securities of that other company. Section 7.2.4. Applicants with equity securities already listed. A capitalization/scrip/bonus issue. A capitalization issue is an allotment of further securities to existing shareholders, credited as fully paid up out of the issuer's reserves or profits, in proportion to their existing holdings. Capitalization issue does not require any payment for shares to be made by the shareholder. Section 7.2.5. Applicants with equity securities already listed. Specific conditions for capitalization/scrip/bonus issue. A. The MSM will not approve any announcement, advertisement, or circular in which a capitalization issue is in any way described or presented as a dividend when shareholders are not entitled to elect to receive a cash dividend. B. No issuer shall proceed with a capitalization issue involving a payment of securities out of reserves, unless it has obtained the prior written confirmation of its auditors that its reserves are sufficient for this purpose. Section 7.2.6. Applicants with equity securities already listed. A conversion of securities of one class into another class securities may be brought to listing by an exchange or a substitution of securities for or a conversion of securities into other classes of securities. Section 7.3. New applicants and disclosure of interests of advisors. Section 7.4.1. If following an offer for sale, offer for subscription, or placing by a new applicant, any of the new applicant's advisors becomes interested in 5% or more of any class of equity securities being marketed, the interest must be notified to the MSM before dealings in the securities commence. Advisors, for the purpose of this requirement, include the issuer's sponsor and its associates, its lawyers reporting.